Welcome to accounting. Here we'll be discussing analyzing the transaction within accounting using the accounting equation. A transaction is a reliable data in accounting when it comes to the basics. Transactions will affect the financial position of the organization and of using the accounting equation to determine if the assets, liabilities, or equity will increase or decrease. Analyzing the transaction is a vital step in any business to determine the success in the future because it determines if the business will be profitable. Accounting equation is a vital part of it because it's a basic tool of accounting. It measures the resources of a business and claims those resources of what the business owns its creditors. The equation is split into three parts: the assets, liabilities, and equity. As you can see, is when you determine this equation is that the liabilities and equity will always balance out of what you have in assets. This is an important part when it comes to analyzing a transaction and you start looking over your financial statements. Financial statements in any business is where you'll see the accounting equation and analyzing the transaction. Income statement, owner's equity statement, balance sheet, and statement of cash flows are the four basic financial statements in any business. The balance sheet will provide all the information and where you will see and use the accounting equation and when you analyze any transaction. When analyzing a transaction, there are three steps to doing so. First step is identify the accounts and what account type that you'll be looking at. Second step is deciding if the account will increase or decrease across all accounts. Thirdly, when using the accounting equation, you'll determine if it is balanced across all three steps. Here in your first example, the business received $10,000 for providing a service. This $10,000 will not affect liabilities because it is considered a service, and so you'll see $10,000 you'll add on equity. And using the accounting equation, it also will be $10,000 to your assets. Totaling out $10,000 on both sides of the equation balance each other out. Here in your second example, along with that $10,000, the business next received $40,000 from an investor to become a partner. And along with this investment, the business decided to then buy new office space for $20,000. Here down using an example of this transaction, you'll see not only with that $10,000 of the service they provided in the first example, but you'll see $40,000 was added to the equity part from the investor, and also was using the accounting equation is also considered. We got $40,000 goes into $40,000 cash of assets. On top of that, when the company pulled $20,000 out to buy new office space is considered an asset, and pulling $20,000 of cash is both assets, so it balanced the equation out of $50,000 on both sides. Third example, the business needed new furniture for that new office space, so they decided to pull $5,000 from the account as credit to pay back before the end of the month. This $5,000 is considered a liability. So here down the example on top of your first and second examples, you'll see that you'll have $5,000 added to your liability as credit. And to balance the equation out, that $5,000 will go into assets because of the supplies are considered an asset of your company. Using the proper accounting equation, you'll notice that with the first, second, and third examples, it all came out to a total of a balance across both assets and the liability and equity of $55,000. Accounting and analyzing transactions for any business, ethics plays a big part. Here in DeMarchi, you must have accurate and honest weighs and measures. so that you may live long in the land the Lord of your God is giving you. When handling transaction, as an example, if I was looking at a balance sheet, I noticed that there happened to be an incorrect entry in the assets of the balance sheet. This entry will affect the final report of the month and yearly end for the business. This can be a very ethical issue because when it comes to taxes or any federal regulations or audits. To correct this issue properly, that I would go about would be knowing ethically knowing what would be the correct entry for the balance sheet, and finding if who may have entered it incorrectly or if it should have been entered at all. Lastly, these are the two references I used for information of Hellgrens Accounting 11E and Corporate Finance 3, along with the Life Application Study Bible.